right, here we are with another Lightning Ventures Syndicate video. I am super excited to be here today with Kyle Fry and James Wallace, and their company is DIGITL Markets. All right, that's DIGTL.co. Okay, and these dudes are way smarter than me. All right, these dudes are like next level smart. Right, I almost wore a collared shirt because I thought it would make me appear smarter. But we have a good group of questions from our syndicate. We're very excited. We invested in DIGITL through our Node 1 fund. And we're going to learn a lot more about them. Okay, so, you know, Kyle, big fancy guy. We're talking Columbia MBA. He's a recovering banker. All right, don't hold that against him. All right, with Credit Suisse and all of that. And he's an advisor to the Merge Exchange, which I think we're going to talk about in a little bit as well. And James, I don't have a lot of info about him, but I can tell you this. He's one smart son of a bitch, and he is the chair at DIGITL Markets and has done a bunch of other stuff as well. So I'm super pumped to be with them today. How you guys doing?
Great. Really excited, Muzz. Glad to know you at this point, but can't wait to dig in and redo some of our conversations we've had.
Yeah, things have been fast and furious with you in the short time that we've known you. So we're expecting a fun hour here hanging out.
All right, good. Fast and furious. That's how we like to keep it over here at Lightning Ventures. Now, here's the thing about DIGITL, right? We've had a lot of firsts lately for Lightning Ventures, okay? And this is the first time that we've gotten hundreds of pages, hundreds, not an exaggeration, the most robust amount of data you could ever imagine. That's concerning regulatory filings, very complicated partnerships, geographies, and everything else in the world. So we do have limited time. I mean, we could probably spend the next 11 days excruciating all of those documents that DIGITL has. But just from a high level start, okay, from a high level start, do you want to try and sum up what you're aiming to do?
Yeah, so we are connecting global investors with high quality assets. That's the 7 or the 5 seconder. And then JW, if you want to expand on that beyond.
Yeah, I think that, and to your point around all the data that came in, we chose the regulated space to innovate. You know, we believe that Bitcoin is sound money. There needs to be solutions and distribution, bring in more market, users, of course, but that's largely been solved as a solution toward, money and the money problems that we've had for centuries, frankly. On the asset side, we resigned ourselves to that. The ICO craze 2018 really proved that there was an insatiable appetite for retail investment into novel things that really tried to or wanted to solve real world problems, and just engaging sort of peer-to-peer on the innovator side and the people with capital. But we realized that we had to get really involved in understanding existing regulation while we lobby for lighter regulation. We do accept that that's the paradigm that exists today. And so, that's where all that documentation comes from, is really understanding that global regulatory, reality. And so to sort of, I guess, add a little bit more context to what Kyle said, is that we had to go really deep to understand what is it going to take to allow an issuer located anywhere in the world to issue an asset and make that, compliantly available to any investor type located anywhere in the world. And that's effectively where we've ended up. So we spent 3 years working on the regulatory framework. We invested in a bunch of regulated entities. We took board seats. We advised, but we also learned quite a bit. And then we spent a lot of money with lawyers and auditors to help us understand and get comfort, not only for ourselves, but our market participants, and how to operate in that space safely. So as Kyle said, we can facilitate the issuance of any asset, fund, debt, equity, etc., from any issuer located anywhere in the world, and make it accessible to any investor type, accredited or retail, located anywhere in the world.
Okay, so that was a lot here. All right, but let me see if I can my plebeian understanding here. So So these securities, right? These instruments, whatever they are being built out on the Bitcoin sidechain, Liquid, right? Which is a Blockstream product. So let's first start with what people might be most familiar with your work on, right? Because this is potentially the largest TAM of any company that we've come across through Lightning Ventures. I mean, it's essentially every asset on the planet and essentially every investor on the globe. These are real world assets. These are digital assets. We're going to talk about the NASDAQ and 24-hour trading and transferring voting rights and all of those fun kind of questions that we have. But let's first talk about something that everyone knows and loves, right? Because we're all Blockstream fans over here. And that is your guys' work on the Blockstream Mining Note. Okay, which is a pretty novel way to have direct exposure to hash power. Being Bitcoin mined by Blockstream's operations, they raised, I believe, 8 tranches of this Blockstream Mining Note. It pays you a dividend in Bitcoin. These securities were issued on Liquid. And I think you guys had something to do with that. So can we start with talking about the Blockstream Mining Note and what happened with that?
I think first it's everyone, the whole audience here believes in Bitcoin, so we don't have to talk about that specifically, the gold, the money transfer, but the Blockstream Mining Note, what a great product for people that it goes beyond this idea of buying spot Bitcoin and being able to frankly hedge against your investment by getting more Bitcoin when the Bitcoin Mining Note matures than what you invested in. The other piece to that note that's really important is this allows people, anyone in the world, to invest and protect the blockchain, the Bitcoin network. So you're actually investing into a product where you're investing in mining and Blockstream is handling the mining for you to actually secure the Bitcoin network. What's more, is it actually issued it, as you mentioned, on Liquid, which is a side chain of Bitcoin, which again creates more, which makes the Bitcoin network even more important. So the transactions of where this Bitcoin mining node are trading, the transaction fees are paid in Bitcoin. So again, moving away from all of the other sort of tokenization and other chains that he created this and said, hey, can we tokenize assets and smart contracts and all that stuff? Creating Liquid allowed us to do that on the Bitcoin network. The conversations we've been having with Blockstream and why we ended up listing the Blockstream Mining Note is because just like Bitcoin was created for everyone and anyone on the planet, peer-to-peer democratization, the only way to do that with a security, which Blockstream Mining Note is a security, is by working with us and listing on our platform. And so the step and the reason they went forward with us is because they wanted to make, like Bitcoin, the Blockstream Mining Note available to anyone and everyone on the planet. So what did we do? We provided 2 things to do that. One is the technology associated with doing an offering and facilitating trading for the Blockstream Mining Note. And the other are the services. And that's really packaging it up from a legal perspective. And we understand the exchange, we know their rules, and we can help make that security available to everyone. So there's a technology and a services component associated with making that Blockstream Mining Note available to anyone on the planet. Does that make sense?
It does. And, I just have to correct you here because it's not quite everyone on the planet, because I tried many times to invest in that. As a U.S. citizen, we couldn't invest through our fund either. So not quite everyone.
Okay, so great point. I'm U.S. as well. James JW is Canadian, so he can go buy it on our platform. So the really important distinction is it can be available to U.S. people. But for now, Blockstream has determined it doesn't make sense for them to make it available because there's 40 Act concerns. They don't want regulators to think they're a fund. And so it's this whole thing about registering as an investment company and not associated with the fact that we can't make products available to US investors. That's a very important distinction. It was a choice made by them based on 40 Act concerns and the structure of the document and how they didn't want to have to deal with some elements like that. They are, of course, looking at making this available to U.S. investors on other series and tranches, but I think we'll let them disclose any of that information. But that's an important distinction.
Another distinction is it's liquid, right? No pun intended. But people who invested in the mining note can go to various exchanges and they have access to liquidity, right? There is a liquid market for it.
Yeah, and that's so it's on Bitfinex securities. If you do, well, first there's the primary offering, which was done by a primary platform called Stalker initially. It's listed on Bitfinex securities in the secondary market. There's this other technology platform which can facilitate swaps called SideSwap, and then it's listed on Merge. Bitfinex, and we know Jesse and the team, there are some material restrictions there. It's largely accredited only folks that have access to it. SideSwap accredited only. There's some noise around how the OTC trades are happening, but Merge is both accredited and retail investors. So again, most people on the planet. Where DIGITL wants to sit is ultimately over all three of these. And other exchanges and trading venues as they come up is to combine these various different pools of liquidity. Where we focus most is with Merge because that's the core. That's where 180 plus countries can have access. Now, ultimately, when different issuers from different jurisdictions or have relationships, or maybe these different trading venues have specialties where they do well in Bitcoin associated products, or they do, whatever, recycling or carbon credits, things will go on different platforms. But for us, where we want to allow this for investors is they don't really care where it trades. And that's not really the point anymore. The point is, can they buy, sell, and trade it at 24/7? And how can we bring these liquidity pools together? And that's where we come from a technology perspective, because ultimately we DIGITL want to sit across Bitfinex securities, want to sit across T0, want to sit across Merge. But Merge really has the most robust regulatory framework where it allows for real global digital security trading to happen from a regulatory perspective.
Okay, so has there been any other really successful issuances on liquid? I mean, Blockstream had a captive audience. It's a pretty easy sell. Has there been any others that have been nearly as successful thus far?
I think in terms of known, I think liquid is still kind of finding its traction. I think we have probably 30 different companies we're talking to right now. One of them is actually $1 billion issuance for carbon. Can't get into too many details yet on that one, but that's emerging, and hopefully that one's done by the end of this year. But I think liquid, look, a big challenge for liquid, and James, I'd love for you to come in on this one as well, that when you look at Algorand and Avalanche and Ethereum, which Ethereum was the initial smart contract tokenization platform for ICOs, and people started doing equity and stuff, all of these other chains have VC firms throwing money at issuers. And I think a lot of people are saying, I'll take the money and I don't care about the chain. But when you think about issuing liquid, that's the competition is, well, should I issue on liquid, or should I take $500,000 from the Algorand VC fund in order to go do my project? And I think a lot of people are seeing this as a get rich quick, the easier way to do it sort of thing. So the value proposition for liquid becomes different. It's like, do you want to issue on one of the, or if not the only blockchain that actually probably needs to exist, or over the long term? And do you want the payment mechanism between the shares to be in Bitcoin, which, if you fundamentally agree that's money, then this is the right choice for you and your issuance of the security. I think most recently what regulators have come out and said is, oh, by the way, we see a lot of these chains, in fact, potentially being securities. So even regulated entities that are using Algorand and Avalanche, for example, may be using unregistered securities like Algo, the payment mechanism to change transactions, to be on those blockchains. So in fact, any issuer on the planet is, by taking a risk, honestly, by not issuing on liquid, which most regulators have said Bitcoin's a commodity or is currency and should not be deemed a security, but all these other chains are securities. So I think now liquid is just starting to find its seat at the table in terms of competing against these other chains. But there's been a lot of headwinds because there's a ton of VC money and a ton of non-Bitcoin chain money, Algorand's, VCs. They all have their own foundation spending. And that, I think, has created a lot of very challenging narratives when issuers are like, of course I'll take money, has been the challenge with respect to liquid. Does that make sense?
If I can jump in real quick and add to that, there's actually, to preface it, I'm the technologist and I'm the least important person in the room. And I think if we think about Liquid Network as the technology, and all due respect to everyone at Blockstream, and we know the Liquid Network dev team very well, they're geniuses, there's no doubt. At the moment, at least, and perhaps in the future, it's the most important part. At the moment, it's the least important part, as I am the least important part in the room. The people that are representing and understanding about regulation and ensuring that all that happens, that's the critical piece. And then we get into the issuer side and the sell side and getting people actually issuing. To get Liquid Network to work, we have to have now have that regulatory certainty to the degree that we can. And now we have issuers, and enticing them in and showing them the benefits of that will power Liquid Network. In fact, I think personally, when I really think about it, I think, in particular, Merge Exchange is our preferred exchange because it has the most amount of functionality, but we have other exchanges. And as Kyle said, we want to bring in as many exchanges as possible for all the reasons that he said. We think about digital being wrapped around, Merge because it has that capital markets infrastructure as the distribution, the technology provider that can go to market. We think about Liquid Network being wrapped around both of us. That core needs to exist. And the reason, in my opinion, that Liquid Network hasn't expanded, and maybe it should have been expected to expand, and maybe in retrospect we're seeing why it didn't. Solid software that solves a real world problem, unfortunately a problem a lot of people don't know they have, which is a very difficult problem to try to sell, right? A very difficult solution to try to sell. Once that core engine is in place, and it is going to market through digital to find issuers that come in that issue on liquid, that is just going to happen, sort of naturally. So Liquid needed other things to happen first. That core engine needed to be installed, which was very, very, very difficult to buy now or to build. As a quick comment, because I want to be really clear on this point. This is a sensational thought, I know, but it's still, there's no reason why it can't be true. Gensler's come out and said there's Bitcoin and then there's securities. I mean, we're paraphrasing, but that's effectively what he said. And we believe that. We don't see anything else. And now Ethereum's move to proof of stake makes it a security in our view. So there's just no doubt in our mind. There's no reason why. And again, we see, venture capitalists have used retail as liquidity in crypto. We know that they have distorted everything, not just financially, but also from the story, the plot line, what we're trying to solve for. But there's no reason why, as Kyle said, you can't transact a security peer-to-peer without an intermediary. And if algo, a unit on Algorand becomes a security, it can't be actually transacted. And there's no reason why the regulators can't come out and say that's effectively North Korea. That's a sanctioned economy, a sanctioned network. Regulated entities cannot engage it just as simply as they cannot send or receive wires from North Korea. That is a sensational comment, but that is really important, I think, to understand why Liquid Network is critical. First of all, it's fit for purpose. There's no other network in the world that's built to do what we need it to do. Everyone else is pretending, and also it does not have that regulatory sort of tail that I think is going to wipe out a lot of people.
All right. So look, I mean what I said. This was the hardest deal memo we've ever had to put together. And there's so much that we can unpack here. Okay. And I just want to bring it back. Hopefully we haven't lost everyone. All right. But if we haven't, okay. So I was talking with Adam back in Riga, and I mentioned to him my ambition that I wanted to have a crowdfunding platform. I wanted to have a way that I can help Bitcoin entrepreneurs and founders raise capital directly from people in a similar style of some of these other crowdfunding platforms that are out there now. and was talking about how liquid would be interesting and would he dedicate some resources from Blockstream to help me explore this. And that's when he first told me about digital markets, and was in that conversation. He said that's what they're doing, right? And mentioned Stalker, and mentioned Merge, and mentioned all of your other partners. Okay, that's how that came together, right? So I just want everyone to understand that when we run a deal, when we invest and run an SPV, as they're called, special purpose vehicle, or spin up a syndicate, or whatever we do, it's very costly. Okay, it's not easy to do. It's very analog. Okay, there's a lot of red tape, and it's just lousy with inefficiencies. Okay, so one of the many problems, okay, that digital is solving for is bringing that into the 21st century. Okay, and also in the old way of doing these things, they're incredibly illiquid. Yeah, you might find something on a secondary market and you might be able to do something, but that's a whole nother process. You got to write a first refusal and everything else in the world that comes along with that, right? So they're solving that from somebody like our perspective, right? Where we want to run these investments. We want a global audience. We want to keep our fees low, right? Because the fees get passed on to everyone who participates. But what else are they doing? They're making it easier for companies on their side. Because, for example, if a company goes to Seedrs or Crowdcube in the UK or Republic or whatever, and they want to do an open crowdfunding platform, they are just held against the wall by these companies with their fees and how they do it, and they are forced to deal with it. It is just, and they sell it on to marketing and everything else that they do, but the fees are absolutely terrible, okay, on all of these platforms. So digital is making it easier for anyone to be able to raise capital for their company, whether it's a large Series D by a big already unicorn company, right, that wants to run it that way, or from a little guys like us in Lightning Ventures who want to do small SPVs in a different way, right, and have them be tradable. So I just want to put that out there, kind of set some of the context for some of the parts that they're doing. We're going to talk about NASDAQ and other markets and all that stuff here in a second. But first off, what's pretty exciting, and I don't know how much you can talk about it, but the MOUs that are currently in place, okay, the Blockstream, certainly they've been supportive. There's a very elusive page on Blockstream's website that's called Blockstream Finance. Right. I'm not sure exactly what's going to come with that down the line. Wink, wink. I'm not sure how that's going to work. And WallStreetbets, right, which everyone thinks is just this sort of, raging kitty kind of online community. Now, you've already got regulatory filings with these things. They're available for review, as well as a partnership or some sort of relationship with Exodus. I believe. I don't want to say too much, but can you guys just touch briefly on some of these MOUs and how that would look?
Can I jump in real quick, and Kyle, maybe you can handle that second, or the actual question. But I just want to comment really quick, Mike, and on the first part, because it communicates a lot of our philosophy, our core values, frankly, our dharma, why we were born to do what we're doing here, or we believe that at least. We think that governance and government is completely broken. And so the idea that the vote matters is just something that even intellectually, objectively, we just should dispense with that silly kind of foolish, naive notion. What's left is, until governance is fixed, and we think probably blockchain will do that, right? Direct representation, remove the people in Washington that interpret constituency, and just have people tell administration what to do. But anyway, that's a conversation for another time. The what's left is money. It's dollars, and voting with your dollars. Like, every time, people don't realize that, you go to the supermarket, you buy an organic banana, and then you buy some sweets and stuff. And I mean, you're basically telling the world to produce more of whatever you're putting your money on. So we believe that it's absolutely essential to the degree that we can allow people to direct their money. And one thing that we know for sure is that venture capitalists and investment bankers have completely broken the direct impact that individuals can have with reality. We effectively have venture capital, 300 rich old white dudes that effectively create investment theses that then apply, hundreds of billions of dollars of capital that then become the world around us, the products and services. We think that needs to be literally, removed. What is now 100% should be like 4% rich old white dudes and 96% people self-directing. So on the with regard to the issuer, what we realize is it's not just enabling buyers to get access to these things. It's also having more issuers come in. We think that innovators, inventors, people that are not like capitalistic and understand business should be able to access capital pools and people with capital cheaper, faster, safer. And how do we do that? Well, if you look at the US post World War II, capital markets, the stock markets basically created the world. And a lot of great stuff came from that. On average, they did 700 to 800 IPOs a year. Now the US does 40. And that's because Goldman Sachs came in and said, no, unless it's a deck of unicorn, it's not worth our time. In Canada, for example, in Toronto, we do 2,200. And because we're progressive socially, we make markets like crypto and cannabis and e-gaming and psychedelics. We basically say smaller companies that are doing really cool things can have access to capital, and we have a system that allows for that. Digital believes, and if you get to the core digital, it is really getting people that are solving some of the world's biggest problems, capital faster and safer and cheaper. So we believe in this model and believe that we will eventually succeed in creating a model where we can do 50, 100,000 global IPOs a year. And so the only way to do that, obviously, is to drive the cost to as close to zero as possible. So I just wanted to communicate that point, because I think us seeing this from understanding the regulatory part, we're trying to remove the onerous requirements, the file submissions, the people involved in accessing capital markets compliantly, so that inventors, literally people that are tinkering, can then come in and list something and acquire the capital they need, that then hopefully they can distribute in the world and shift the world for the better.
I'm going to piggyback off that, and I think it's a super important point. Muzz, is this idea of driving costs to zero. And what's interesting is we're obviously a business, and we need profits to fuel the mission so we can go do stuff. When you start thinking about how we're approaching this and the comprehensive nature of what we want to do on the issuer side as well as the investor side, so is we will get more licenses, we will do registrations. We have a Swedish trust in Europe. We have a Canadian MSB, money services businesses. We will have our Seychelles broker-dealer license soon. We're getting those. What does that allow for us? There's also other revenue lines for us to make, and thereby we don't rely on any single revenue line. I think most people, when you talk about some of the costs you brought up, Muzz, is we want to serve millions of people. And so if you serve millions of people, you can charge them 100 Satoshis, right? You don't need to make $100,000 on this one client. So driving costs to zero, because we have diversified revenue lines, because we want to provide a holistic solution, because we want this to be easy for people. You don't need to understand how capital markets work. You need to say, I have an amazing company. I need capital to raise it, and I'd like you to allow me to do that compliantly. Step into our entire comprehensive platform, and you can go raise from your community and go find the people in the world that also believe in what you're building. That's the magic. And that's what JW is hitting on as well. This idea of we're allowing innovators to access capital to shape the world for the better. So there's a super deep social impact mission. And when you start to compare what we're doing today, so there's two things that are important here. So crowdfunding, extremely limited, doesn't have the trading, costs a lot of money, and it's just highly restricted, very local, depending on where the jurisdictions are. But you can see this thing is taking off like exponentially. The amount of people using crowdfunding is absolutely massive. It's still expensive, it's still slow, it doesn't have near the capabilities of the platform we're creating. Then you look at legacy infrastructure. There are venture exchanges, the TSXV in Canada, AIM Exchange, which is part of the London Stock Exchange. It's still $500,000, and it's 6.5 trading hours, and it's not global, and they don't accept Bitcoin, and et cetera, et cetera, et cetera. There's this, and I think you were alluding to this soon, Muzz, about the NASDAQ thing, but you just start to unpack. If we can lower costs to zero, and we can allow the people that are making the world a better place to access capital so they can do more in the business and do more in the world to shape what we're doing, we've won. And because we're providing a comprehensive solution, we can lower the cost of capital for everyone in the game. And we can allow investors to access things on a compliant basis, because no matter what we say or do, there are going to be regulations and securities laws. But by the way, that's gotten a bad rap and a negative connotation. It's okay if it's a security. Everyone, it's okay. Investor protections and rules are okay at some level. KYC, let's follow it. Terra and Luna hurt a lot of people. There's a lot of people getting hurt in the crypto space because it's unregulated. So I think we just need to be mindful about these things about regulation. When it's a security or it's assets, it's okay to follow these rules. When it's my money, I want self-sovereign like Bitcoin, which is why when we start to marry the philosophies and visions behind things like Bitcoin and the capital markets, we can bring the best of both worlds. And that's really what we're trying to do. So do you want me to now go to the question, or should I pause there, Muzz, the MOU question? But you hit on a chord with the cost thing, because that's absolutely, I mean, you've read the tea leaves, and that's absolutely something we're trying to do, is remove all those unnecessary costs where people are sort of value extracting. If you bring value to the table, you should get paid. But if you're not, you got to get out of the way and let technology step in the way.
I do want those questions answered. Here's the problem. It's not really a problem. It's a great thing with what you're doing with digital markets. Is there's so much to unpack here. Okay, so you have the mini IPOs, right? You have these this IPO alternative, and then you have these smaller listings, right? But what you're doing is for everyone. Okay, so like you mentioned with going public on an exchange, maybe it cost 7 figures, whatever it costs. You get 6.5 trading hours a day, but that's where all the traditional investors are, right? That's where the money managers are. Okay, those money managers are not signing up to a brand new sort of cutting edge of platform, right? So if you're going to eat their lunch on the way you're handling some of these mini IPOs, how then do you tie in the traditional guys to be able to participate? Because the Goldman guy is going to sell it as, well, it's an exchange. They're leaving money on the table. Nobody's going to use it. How then do you deal with that?
I'll go first, unless James, you wanted to.
Oh.
You're off mute there. I think first and foremost, it doesn't have to happen right away. We're serving an entirely different market that they're not even paying attention to. And so one thing at a time is we're providing a solution for a problem that exists, which is a compliant way to raise capital for people that have communities. A lot of businesses, there's so many secular trends happening. There are global businesses that have global communities and global customers. The best people in the entire world to raise money from is that group. And so with the internet, the world is becoming closer, jurisdictions meaning less, and people don't want to think about this jurisdictional raising capital only from their local jurisdiction. So making this global pool and doing it compliantly is something. In terms of the legacy infrastructure, there's two pieces there. One, for sure, they're staring at it like, where is the adoption? How does this work? They're navigating and trying to understand what their digital asset strategy is. And by the way, I think it's noisier than they expect. I think when they break it down, there's Bitcoin, there's all the other stuff in crypto, and there's all the assets on the planet in digital securities. If they can just remove the noise of Web3 stuff, that will substantially simplify the entire legacy markets infrastructure to step into this new thing, which is just Bitcoin and capital markets tokenization using current securities laws. And if they can fit within there, we are absolutely having conversations with a lot of legacy players on how they can step into the new infrastructure, but they get confused. They feel like it's slow. They don't know how the technology works. And the easy news is they can plug in. So we have a transfer agent registration license in the United States that's integrated within our solution that will be able to handle legacy and regular infrastructure. We have a US broker dealer that's doing US broker dealing stuff, and the legacy infrastructure plug into it. We are talking to a lot of different players already in here. They are going to want and need to see traction. And by the way, big institutions won't move unless it's $1 billion or more to $1 billion asset. So there's a lot of these smaller markets they may never touch, or they're going to create special purpose vehicles or funds to touch anyway. But we're building this whole from a ground roots, bottoms up sort of building of community driven, knowing that our infrastructure does support institutions and a lot of the bigger institutions there as well. But I think they're going to have to see how it shapes. They're going to have to see adoption, but we're absolutely talking to them now. It just, we don't need to wait for them. This isn't a solution that requires them to come in to move and make a difference in terms of trading and facilitating, capital raising at a fraction of the cost.
Now, we did, if I can just add really quick, we did raise a fund and listed it on Deal Square, NEO's private marketplace. NEO's Canada's second largest exchange. And we went up and down Bay Street, which is Canada's Wall Street. We talked to the dealers and we understood sort of what they wanted. We literally call it the digital asset fund. It was an education piece and they were excited about it and that was cool. Now, putting that aside, to Kyle's point, I just want to say two things because I think it's really critical. Our primary exchange is a World Federation of Exchange member. I mentioned this in the past. Qualified foreign exchange for Her Majesty's Revenue and Customs, qualified foreign exchange for OTC markets. So there is infrastructure there. There are direct highways from even US, Canadian, UK retail investors. People can access our primary exchange without some sort of exotic setup. Now, having said that, or in addition to that, I should say, more and more people are self-directed. So first of all, the investment advisor is going away. We've seen that since the 80s, right? The robo-advisors and the trading costs going to zero. People are self-directing, and that's awesome. People are actually even self-directing their retirement savings. So like RRSPs, IRAs, TFSA, et cetera. If you self-direct, you can access our exchange if you use the right broker, and we can just get you that relationship with the broker. That's pretty amazing. But one more important point, and I realize as we're running out of time here, we're a big believer in this concept of destination securities. Kyle already said, it doesn't matter whether it's listed. The question is it compliantly listed in trading? If so, then we will find ways to get people either directly or through brokers. Like we have these legacy infrastructure highways, as I said. Grayscale listed all their funds on OTC markets. It's the vast majority of OTC markets trade volume. People go there, they don't even know what OTC markets is. They don't care because they want the product. And the exact same thing is going to be true with digital. Our products, back to your question around MOU, awesome products from great companies, Blockstream, Wall Street. People just want to come here. They can come direct or they can come through their broker. When the brokers are coming to us, asking us for access, that's a little bit different. That'll be a nice to have, but we definitely don't need it.
So then, just to tease it out there. So for this WallStreetbets sort of product, what is that? Is this like an ETF? Is it a basket? What is that going to look like? And is it live already?
Yeah, great question. So I'll jump into that real quick because I was actually just last week in Mexico City for a couple of days. I spent a day and a half with Jamie Rogozinski, who with his brother Joel founded WallStreetbets. And I think that we've talked about that in the past. They're good friends. Our worldview is very similar. Our intention in the world is very similar. And we like the idea of just open, transparent dialogue, and maybe being a little bit sensational and salacious occasionally is useful in getting attention in this very busy world. And Jamie is very good at that. So I'll just tell a really quick story. And this sort of talks about the MOU and the scope of the engagement with WallStreetBets, which I will say, in case I fail to say it in the future, is massively comprehensive. There is a significant brand and IP, and we have the ability to effectively, obviously with Jamie's ability to object, to use the WallStreetBets brand in a way that's compatible with their community, of course. But to that point around what are the products and what have we done? So about 9 and 12 months ago, Jamie was on the phone with Wall Street Journal. They were asking that question: what's next? What's next after this GameStop thing? Tell us what's hot, what's not, what's happening. And he just casually said, I've been looking at the political insider trading, and I think it's a big issue, and no one's talking about it. And obviously now people are talking about it more. And I would say largely Jamie's responsible for that. WallStreetBets is responsible for, just like they did with market manipulation and market abuses with the hedgies, they brought the media's attention to the political insider trading. So we talked about, and in the media, they labeled the Pelosi portfolio because she, Speaker of the House, is the most well-known potential abuser of inside information. And her husband, for anyone that knows the story, but her effectively trade very well, like 28% year-over-year returns over the last 10 years, doubling the best Wall Street traders. There's a problem here. But when we look deeper at it, and he was calling it the Pelosi portfolio, but going back again, we don't believe that the left or the right, the liberals or the conservatives are the problem. We believe corruption is the problem. So for two reasons. One is, it's not a Democrat problem, a liberal problem. It's a political problem. And she's retiring in 2 years as well. And so we thought, let's create a meme stock on political insider trading that can last forever. We have decades of work to do, removing the corruption in politics and its relation to capital markets. And so we created a product, and if it's important, Kyle can explain how exactly we did that, because I think it's cool. But we created a product called the Insider Portfolio, ticker INSDR, which is available global retail, including the US. It is currently trading, and you can basically get access to Pelosi's portfolio, which is her publicly declared stock holdings that I think she has to update either monthly or quarterly, and you can get access to that for $1. So, we again have that product that we believe that people want from a brand that they recognize. And will just say really quickly that it's not a single product. And going back to Kyle's comments on, we have a framework where we can just launch, endless numbers of products for brands that people want. And it's effectively, like you said, ETF-like. It's not technically an ETF, but that's a technical term. It is a passive fund that has a theme, and we can wrap several themes that match the WallStreetbets community. Basically, meaning what do they want? What do they want to invest in? We've talked to the community. They gave us feedback. We make a decision, but typically, if the community wants it, we believe that the capital will show up and trading will occur. We can just use that brand license with WallStreetbets and wrap a product. So the next product that we're working on right now is a basket of El Salvador bonds. And the cool thing about it is there's 2023 expiry, 2025, 2028. For a lot of the viewers of your podcast, probably aware of the Bitcoin or the Volcano bond. And then there's an ability for us to actually have cash available for future bonds, and maybe even co-create and sponsor a bond for the El Salvador government in the future, separate from Volcano. So that idea is meant to be, IMF shouldn't be the sole determinant, just like the rich old white dudes and venture capital funds. The World Bank shouldn't be in Congress with the IMF the sole determinant of which sovereigns get money. We should be making these bonds from the origination point and the funding point and the confidence point. We should allow the people to decide and vote on nation states that are doing cool stuff like making Bitcoin money. So that's a heads up to your viewers as well, that one product that's coming soon is a WallStreetbets El Salvador product, and we're also working on a couple other products as well.
And what's really cool about that, Muzz, is the insider portfolio. There, we have the infrastructure where literally we can create another SPV. It's a cell. It's ring fenced, assets, liabilities, for all intents and purposes. Create the cell and get a new product listed probably within 30 days for less than $10,000 and make it available on our platform to anyone on the planet. So when you start to think about building a community and going out to your community and saying, hey, what do you guys want? What do you believe in? We can actually stand up products insanely cheap and very fast and make it available to anyone on the planet as an issuer. So we have the infrastructure where we can create the legal entity and the master program, what's what it's called, which is a master agreement that oversees all these things, and create a separate instrument that can be traded on our platform to anyone on the planet for 20 hours a day. So we have that infrastructure. It's just obviously building it out. But the insider portfolio that James mentioned is the first product we've stood up. So it's just sort of the beginnings of that piece as well.
Okay, cool. Let's take a look real quick on this what I like to call fancy logo slide. You don't have to go through all of them here. But is there anything here as far as sort of a relationship or something that you maybe want to unpack, or just does anything here stick out? Obviously liquids in the center here, but some of these companies that everyone knows, things like Prime Trust, which we're certainly big fans of, although they're not as cheap as I'd like them to be for a lot of younger companies to use. or Circle even. What is your, like, how do you fit in with some of the logos on this part of your page here?
I think you're drawing attention to the fact we probably need to organize that in categories for sure, because we're obviously working with all of those people, and we do believe they trust us. Some of those are investments, some of those are partners, and literally, and some of those are providers. So with Circle, for example, we and this is again getting to the point of like what makes us truly different. We still haven't actually talked about. We talked a lot of the features, the technological stuff, but the benefits, the stuff that people actually care about. What advantages do they have with digital versus legacy? And we're about to get there. But with Circle, that's one of them. Is that again, our primary exchange, Merge, is the only stock exchange in the world that has crypto funding. And that again is a benefit to a digital user. You log in, you create an account, and all of a sudden you can deposit Bitcoin or USDC and start buying stocks. And that is not available anywhere else in the world. And so, yeah, Merge has a very deep integration with Circle. And if you go to circle.com, you can read up on that. And they're very, very excited about Merge.
Okay, so we got to move on. All right, so how about this? Let's just say that a Series D later stage, already Silicon Valley type of unicorn name wanted to run their next round using, with these rails. Okay, how does that look? Okay, so instead of the traditional, Union Square Ventures or XYZ is leading and doing it the traditional way, how then would one of these Silicon Valley high flyers kind of raise, $300 million or so? And would everyone be able to participate, or would it be more of a process into getting that kind of traditional venture to participate? And how would you sell it to that company? What's the main benefit? Why would they want to do this?
Yeah, the answer is you can do both. I think if you said, oh, Union Square won't invest unless you don't do this thing because it's against sort of their ethos of getting additional rounds. But the biggest benefit is if people understand that their community, they want them to also be shareholders. I think there's a big difference between a lot of people that walk Silicon Valley and look for VC money and say, I kind of don't care where money comes from, and I'd rather have one line on the cap table and don't want to deal with a bunch of stuff. I think the administrative burden associated with what we're building is not very high, frankly. I mean, you do have to make transparency and disclosure requirements, but generally speaking, this is about making your shares available to anyone on the planet. And so it's a different sort of vision from the CEO or the founder wanting to make that happen. I think in terms of timeline and how all that works, I think raising capital anywhere from, it depends. And if you want to pre-launch, you want to do marketing, I think it's, we typically say 12 weeks. It could be done substantially faster if you're not raising capital, you're just doing a direct listing, allowing your shareholders to sell to others and creating a secondary market and liquidity. But to do the primary offering, about 12 weeks. We do all the documentation. I think you'll need some lawyers at the very end to review the docs. I budget something very small, something like 5K sort of thing, because we generally know exactly what we're doing, and you just have to follow the rules of the Merge exchange. So there's a lot of legal support there already baked in there. For a company like a Series D type person, them raising global capital and doing it directly on their website, you're removing a ton of intermediaries, because you could, again, you could put this directly on your website. People go to your investor relations page, they look up all your stuff, they click invest, and they invest during the offering. The KYC is all embedded, the funding, the subscription agreement, all of that's handled within our solution. And then once it's trading on the secondary market, people can go directly to your website. Same thing, trade immediately on your website. Now that trade can happen through our platform directly on Merge Exchange. Like, there are on-ramps from all over the world. you're just using the regulatory framework, but having it directly on your website, why not? I mean, that's the facilitation and making it easier, but we're removing a lot of the people that are in a sort of a typical process.
Okay. So how about this? Now, this sort of cap table management and these tools, I mean, I'm familiar with a lot of the other stuff that's out there, right? There's the Clerkies, Carta, Clerky, all these type of things, right? So this sort of SaaS business here with these tiers, can you walk through kind of who this is ideal for and kind of what's baked in here?
Yeah, so let me start here, JW, and I think what's super important here is, in our view, cap table management, tokenization, and things like transfer agent services are commodities. There's really no differentiator. It's ultimately things that everyone needs. Is there a differentiator across? There's sort of the different value pieces. Like, ultimately for us, we want to provide exchange trading at a fraction of the cost, which no one else can do. So you look at Cartas, and they've got the 409A valuations, et cetera, and different pieces that, which I think is very US centric. They are highly contingent upon just those elements of their business. If you look at their website, Carta serves how many clients? 15,000. Okay. We built our platform to serve millions. We want to serve the next generation of innovators and founders. And so the idea here is the basic one, and I think this is a similar business SaaS model, which you see, this isn't a surprise, but the idea behind basic is, when you're two founders in a garage that just have an idea, use the basic. It's very important. It's free. We want you to have your cap table organized. We don't want to deal with a messy cap table when you actually go to raise funds. Everyone here probably has seen messy cap tables that are a problem and create problems. So we want to get people in early. We want to give it to them for free. We want them to be able to manage things like options and basic stuff. But this is not our business model. We are not here to make money off of basic commoditized things. So we want to make money on where we create value, which is the combination of all these things. Again, going back to what we said earlier, driving costs to zero. Pro now is when you start to step in a little bit more. You want to do a private fundraising. You want to issue the digital security. You want to start doing things on chain. You want to facilitate transfers between investors. Maybe there's wallets. You start getting to some more complicated stuff that requires some of the more intricate things, right? There's infrastructure there to build. Again, still only as much as 6 or 7 Zoom seats, $99 a month. You can facilitate that, but that starts to get into company that wants to raise capital. You're a little bigger. You want to step in and you want to do this. You don't have to understand blockchain. You don't have to understand wallets. You don't have to understand issuing a digital security. It's all there done UI, UX, such that you don't need to understand anything. It's very simple. We spent a lot of time making sure it's very easy, the onboarding, removing clicks, and it's easy for you to understand. And there's ways for you to learn. And again, the platform's meant to allow you to grow from 2 founders in a garage. Now you start talking about enterprise. That's when you start looking at things like transfer agent services, listing on an exchange. You want API integration directly into our platform and or the exchange. You want humans to be involved. Like basic and pro are meant to be no humans involved. Again, to allow this to be super light, but to provide you with the things you need to raise capital or to issue a digital security.
Listen,
I could just, Mike, add 2 things here real quick. The how, you're looking at the how, you're looking at a feature set, and the how is pretty simple when you understand the why. And what the why is, it's trying to solve 2 major problems. The first one is that I personally have been an serial tech entrepreneur for 30 years and serial tech investor for 15, and I've seen a lot of commonalities between failures and a few correlated attributes and principles around success. But one thing I've seen that's almost consistent is that if a startup is lucky enough to survive, in the 3rd and 4th year, they have to go back and spend that entire year fixing what they fucked up from the beginning, which, frankly is understandable, because the goal was to survive, not be perfect and not thrive and not be set up for the next scale up enterprise phase. But the reality is that this solves for that, where I think the vast majority of people are getting slow sort of coaching. I mean, the tagline for the issuer side, so digital is a multi-sided marketplace, but effectively two sides, buy and sell. And you're looking at the sell side. And the tagline for that is investors will love you. And creating it's not just managing a cap table, it's actually learning about investor relations and learning about when do I want to raise capital and not selling too much too early, because that's your worst valuation. It's really teaching them and training them, not just avoiding that third to fourth year sort of sophomore, now I got to fix the rookie stuff that I did. It's also just learning what it's going to take to become a serious company that does an IPO. And that, to the second point is the encouraging them. And the problem that we're trying to solve for, obviously, is enabling them to focus on their business at all points. And that, I think, is one of the taglines that we have too, is that basically let us do the capital markets part. We all know that if you're lucky enough to find funds, capital, you've probably done two jobs, right? It's 90 hours a week, 45 hours operator, 45 hours fundraiser. And that, and that's what sort of upsets us with the venture capital mindset too. Like, that's okay, that's normal. No, putting aside the human cost of that to your spouse and your health and so on, that's all just designed to get people running toward capital rather than ensuring that capital flows towards the people that frankly deserve it and capital wants to have. So removing all of that, I mean, we don't advise 90 hours a week of work ever, but if you're going to do 90 hours a week as an investor, I prefer that you do it on the business and not be chasing other investors, right? So this is meant to solve for that and ensure that there is a crystal clear, and I guess that's the other point. The larger point is that a lot of the failures of people to get from where they are to where they want to go is that there are siloed providers that provide this very narrow service and say, okay, you have that now. I even say, like, the venture capital investment banking, it's like there's no support. But the venture capitalists, they finish their seed A, B, C, maybe Series A, and then it's like, good luck. Good luck finding the right investment bank to take you to the next level. We think that that's unnecessary. We think it's necessary if we're going to solve this to ensure that there's a comprehensive global end-to-end service. So there's a tech service here, but layered in on that is support for these issuers, these startups and companies, all the way from idea to IPO. And our commitment is that there isn't going to be any gap that these issuers and startups fall into. That is unnecessary. That's man-made or human-made. And we want to make sure that there is that support and that carrot, obviously, of that big liquidity event, that IPO that everyone gets excited about. You can actually go fishing for once in 7 years and enjoy your life. And that is the destination. That's super exciting, but there's a lot of little things in the middle. We think of ourselves not as the quarterback, but the glue to make sure that no one gets lost along the way. We can constantly sort of nudge you back. You're on digital rails from the beginning. You've issued on liquid. You can go straight to the exchange from here. The question is, how fast, can you get your startup moving?
What you're charging there in that enterprise, I know this isn't the core part of your business, but it's incredibly needed. What you're including there for $250 a month, when you get to that point, in the traditional sense, it's probably about 11 minutes with your attorney. Is all the stuff that you're including. I mean, you're talking about transferring shares. And,
that's right.
I mean, you're doing everything else in there. But
there is a plus sign, so it's 250 plus if you start turning on all the bells and whistles, because obviously there's a direct cost, right? Transfer agents do have a cost, but you're absolutely right. That's the perspective here, is 11 minutes with your lawyer. That's right. It's
pretty much that. Okay, so listen, we could talk all day. That's the problem. But I want to touch on a few things. Okay, so notably, Tesla, among numerous other securities, will soon be live for trading on the digital platform. Okay, so these are not derivative contracts. There's no funny business going on here. These are real shares that somehow magically retain voting rights. No idea how that's going to happen, but very curious if you have 30 seconds on explaining that.
Yeah, I mean, because of who they're held by, they're actually held by a regulated institution on behalf of the underlying investor. And so they have the ability to pass on voting rights or dividends or whatever as if you owned the share. So it's not a derivative. That makes it real. Now, if you start getting into fractionalization, there's some noise in voting and dividends and how that works, but that's something we're already thinking about and doing as well. When you start to chop up these share prices, you saw Amazon did a share split, so their share price is much lower now, but being able to fractionalize these things, like for us, making them available was a big portion of. You see the Blockstream Mining Note, you see this venture company we're raising debt for, you see a Bitcoin instrument, you see another venture fund, and then here's Tesla. So why not come to a place that has all of these different assets? But James, do you want to come in on this one as well?
I think that it is a few things that are noteworthy and notable. One is that this is what happens in comparison to a crowdfunding platform or an ATS. This is what is possible when you actually work with stock exchanges. Stock exchanges are, as I said, the apex of the capital markets system. And they can do things that from boring stuff like post trade, which it's boring, but it's actually essential. And the reason why ATSs don't work, to sort of peer-to-peer stuff, like the fast track is a framework where we were able to actually take these NASDAQ stocks and pipe them straight into another national stock exchange. That actually doesn't sound too crazy, does it? And that's how they're there. And as Kyle said, because it's actually all held with regulated parties, just like your broker would hold your Tesla share. We have a broker holding the Tesla share traded on the exchange. The second point, I guess, and just to be clear about this, because what Kyle said is critical as well. There's that extraordinary reality around, just because they're also a World Federation of Exchange member and they follow the same regulatory framework. Let's just it's not even a cross list, it's a fast track. You're basically just piping it in. So there's lots of other benefits, but now we're innovating on top of that. The exciting part is that unlike the mirror synthetics, which were only access the price, and we saw what happened, an absolute implosion, that whole Terra setup. But even looking at bilateral derivatives like FTX, right? They're very dangerous. Those products, won't get into the details because it would be another 15 minutes to describe it, but they're certainly not broker-dealer held, traded on the stock exchange. They're basically, an imagination of something in the hope that the broker-dealer can actually fulfill the obligation if the user investor wanted to redeem, which they actually can't. But on top of that, we take those characteristics of mirror and FTX stonks, and we actually do it right. So now we're looking at, and over the next quarter, so now that we have these NASDAQ 100 assets available on Merge and on therefore on digital, now we're looking at, okay, now how do we make it cool? How do we make it actually interesting? Even though that's kind of interesting. And what we obviously have like immediately is that idea of the tokenization and therefore the fractionalization via liquid network. And so, this idea again of being able to trade something to 8 decimal points, which is what we believe in no matter what. We believe that should be available on every single asset. And in addition to that too, and this is again that long list of benefits that a lot of people don't understand, problems that they don't know that they have, the ability to trade is 24/7. So we all know that we have American, North American, European, and Asian market hours in sessions. These will soon be available. In addition, just to being available to global retail, which is actually a problem. So that's something important. North Americans were spoiled. Yeah. We get access to all these assets, every single broker app on our phone, and it's available. It doesn't seem like a big deal. And maybe it's not. I think it is a big deal when you can buy WallStreetbets beside Bitcoin on the same platform. That's kind of cool. But the reality is not a lot of people can even get access to that at all through their conventional channels in their home jurisdictions, but certainly not during their hours, right? They have to set up buys and sells overnight, or they have to wake up in the middle of the night to be able to trade US New York hours. So in addition to the fractionalization part, which is I should be able to buy 1/10 or 1/1000th or 1/1,000,000th or 10 millionth of a Tesla share, I should actually be able to do that 24/7, which this is nothing new to the crypto world. Absolutely novel and almost outrageous and sensational and salacious to legacy, but it's coming.
Okay, so let's do a quick lightning round because we will be here all day. All right, so DIGITL has not raised money previously, and this is bootstrapped by Kyle and JW. who have put north of 7 figures into this thing along the way to get it impressively to where it is today. Okay, so what I'm seeing here is DIGITL is expecting profitability in 6 to 12 months and projecting to generate $5 million in revenue. That's for 2023. Now, is that just in cash, or are there equity considerations that you're taking along the way as well? Do you want to talk about the makeup of cash versus equity for all of your offerings?
Yeah, why don't you go on that, Kyle? And well, one thing I would say very quickly is it's multiple 7 figures we've invested, and we've not taken.
Thank you for clarifying that.
And a long list of other sacrifices along the way. And one of the reasons is because I think this is really important, philosophically, principle based, but also for Lightning Ventures and how you all see the world as well, is that we intentionally did that because we did not want to take money from anyone that was not perfectly aligned with the mission. We do not even want, Kyle and I are very mature. We've been around for a long time. We've been doing this a long time. Very difficult, I think, to manipulate us, but we don't even want to deal with just the soft sort of pressure of doing something because it's profitable, near term, right? Which is basically just describing the whole shitcoin world. So we have been very, very dedicated. And I could give a list of people that we've gone after. And Mike, you are absolutely, like, literally someone that we've avatared out. This is the person that we're after, and we're thankful for you. Coming into our orbit, or us coming into yours. Don't know which. Don't care. But here we are on our way off, feeling good. So our investors, our cap table. And we haven't sold much, is only people that think like you, and we're very grateful for the opportunity to reach into our pockets for the last 3 years and self-fund to get here.
Yeah. So bootstrapped, and the alignment of bringing capital now for the first time is really more a function of us being in cages, building for years, spending millions of dollars, and now it's all about public. It's all about awareness. It's all about spreading the message of what we've built and what we can take to market. And so the raises of this and bringing investor money in is to start to expand that network of people and ambassadors that understand the business and can really start to begin to describe what we're here. So it's perfectly aligned with where we are in our business and journey, which is it's built. Now we just want to tell the world.
And Kyle, can you just expand really quick on Mike's question or comment around, I mean, we have 8 different revenue streams. And again, this odd sort of desire to unlock as many revenue streams without obviously having shiny object syndrome and focus issues, but at the same time, really trying to collapse that into a couple streams and bring that as close to zero as possible to democratize access truly. But also, and Kyle works much more on the issuer side than I do. There is, as you said, an equity component. So there's a revenue component, and that's kind of nice too, about aligning interests and so on. You're so much better at that, outlining some of the ways that we can put stuff on the balance sheet and generate revenues.
Yeah, on the issuer side, there's the listing fees, and again, like it depends on if you're doing an offering or not, but that's cash coming in. We'll do % of the offering fees as well. And again, that's usually very low because I think there's again, lowering the cost of capital. There is an equity component. Part of that is not only because that's what we're most interested in, because we want to see the upside of these businesses. It's about aligning success, as well as we use those shares to market make. Our trading team has those so we can facilitate liquidity with those. So there's actually a purpose for us receiving equity compensation in the context of that as well. But yeah, eventually custody, payment fees. We're looking at different loans of securities for investors. We do make trading fees as well. As JW said, we have several revenue lines that will allow us to, again, the point is to lower the cost of capital, but that's, I'd like to IPO 100 companies next year. The 5 million is completely rough and sort of the idea, because I think the exponential curve for us is probably Q2 next year. And I absolutely believe we're going to hit profitability, no question. And I absolutely believe we're at the 100% the inflection point of the industry and people understanding. And again, that's why at this stage, it's all about awareness, because most people when we try to tell them what we've solved, they still don't believe us. And I think it gets into a lot of the narrative and gobbledygook, frankly, that's out there in the market about people democratizing and tokenization and all the stuff. It's solved, it's done. Just nobody knows yet. And that's where we're at.
All right. So to close it out, let's just put everyone's mind at ease. I got some questions on bearer assets, okay, which is exactly why I personally believe that there will never be your real estate or your medical records on a blockchain, because some guy's trying to save your life and you lost the password to your medical records on an immutable blockchain, or you lost the deed to your condo because your dog ate your hardware wallet. These things will never happen, right? But you can, now this is just my understanding of it, you cannot have a security floating out in the wild that doesn't have some person, individual identified attached to it. So in the case that somebody loses access to their wallet, right, that has some of these securities, what then would happen?
Yeah, so go ahead, James.
Yeah, well, I was just going to say, I think a framework that comes to mind really quick, and you can probably say it a little bit more elegantly, Kyle, but I love this idea of there are three controllers, potential controllers of securities. And you're right, Muzz. The first assumption, first principles is there will always be a controller. And if there isn't a controller, the security isn't worth anything, and it's just, it's a nothing. So the controller is the issuer. And this going back to like that SaaS model that you saw, this sort of free pro enterprise. It doesn't quite fit this way. You can have combinations of things, but you can think about it this way. You have the issuer for the free, you have a transfer agent for the pro, and you have the exchange for the enterprise. And that is sort of the evolution of an issuer. The issuer needs to, the security needs to be issued by someone. On Liquid Network, there's AMP and the asset management platform. There's all this sort of, there's a control structure. I mean, it is a permission blockchain. And so it will always either be the issuer, a transfer agent, or an exchange. And that, like I said, is sort of the evolution of it. But yeah, there's no, I can't imagine a case, and there will be, but that just means that security is valueless or doesn't have value.
Just, you know, Bitcoin, not your keys, not your crypto, gone forever. But I think a Bitcoin ETF or the OTC GBTC brand, if you lose, you can't lose the security. They need to know who it is. So as soon as it's wrapped and it plugged into the security ecosystem, there is a permissioned element associated with it. But that's because regulation, KYC, anti-fraud, there's nothing we could do about the regulatory side of that. So you do, to your point, Muzz, always have to know who owns it at some level, and all of that's tracked. So as soon as you lose something, or if you do, it can be burned and reissued. But not
exactly.
Not
that's what
Bitcoin.
I'm looking for. Yeah, that's
so
that's what I'm looking for. Burned and reissued.
You're safe. You don't need to know what a wallet is. You don't have to deal with it, but you can, because if you self-custody in a wallet, you can do more cool stuff and you can hold it yourself. So you get the best of both worlds. But yes, absolutely, burned and reissued.
One of the benefits, I just got to say really quick, is that a lot of people say, especially decentralized maximalists, because that Bitcoin is a decentralized permissionless network. Liquid is a quasi-centralized permission network. Cool. Now we know the difference. And a lot of decentralized maximalists say, well, that's unacceptable. And the reality is two things. One is it has to be acceptable. And the second is the question is more like, how do we make it most acceptable? And the answer is that we need to create systems that are smarter, and we need to lobby regulators and have conversations about how to reduce the amount of exposure to third parties that come in and not only disrupt it, but interlope and expect access, et cetera. And people that abuse the access. So to go back to the WallStreetbets conversation or story, what happened there? What happened there was a bunch of people bought GameStop and AMC and others. And in the fine print, the broker dealer had the right to lend that out. Okay, who's borrowing it if it's being lent? Hedge funds. Why are hedge funds borrowing it? To sell it. Cool. So the broker dealer, in effect, without real explicit permission, allowed billion-dollar hedge funds to take the opposite position of the individuals they sold those securities to, which, to Kyle's point, is why self-custody is critical. So it's not that we are avoiding all parties' access to our information or frankly to control the security, which, going back to the issuer is the controller. There's still someone in control. the company, the startup, the person that issued it. May not feel as scary as NASDAQ controlling that, but Bob still could delete your shares. I mean, that would be a lawsuit, right? But the whole point is, how do we put the most amount of power into the hands of the user? And we do that largely by excluding as many people and saying, no, you cannot even see it, let alone have access to it, let alone have permissions to it. And that's what we're trying to solve for here.
And as you've probably heard, things like T+2 or T+1 or T0.
Oh, of course. The settlement
Yeah.
times are terrible.
So ours is 0. It's
Yeah.
immediate gross real-time settlement already, period, full stop.
Okay. Wow. All right. I think that's good. My video editor is going to kill me here. So
Three podcasts, just 3 podcasts.
So in closing, digital markets is an absolute beast, an absolute monster. This is the biggest moonshot idea, the largest TAM, right? For those who don't know, that's a total addressable market. It is just gigantic. We are talking massive possibilities here. There's a great quote here in one of your many due diligence forms here that says 100% of the stocks and bonds trading on Wall Street today could be tokenized, and in 5 years 100% of the stocks and bonds on Wall Street will be tokenized. Okay. That is the former chairman and CEO of the NASDAQ. And that is interesting because when you're a Bitcoiner and when you're in our group and when you have turned off kind of the noise, it is all of our hypothesis that this will not be done on some bullshit other thing. Okay, this is not going to be done on some other chain, some other sort of thing. It's going to happen on Bitcoin. Nation states are adopting Bitcoin. All the innovation will continue to come out of Bitcoin. And I believe what digital markets is aiming to do here is just that. So I'm really excited, guys. And I don't know if there's anything you want to say in closing, but if anyone's even still listening at this point, I mean, this is such a big idea. Like, it's so hard to explain. It's so huge. This is not a debit card. Okay. This is not like fun cash back things in Bitcoin. Okay. This is not a video game. Okay. This is like a huge idea and undertaking. They're already on their way. They've got licenses secured. They've got all the partnerships in order. They're on the board for many of their partners. They're Liquid Federation members. These guys are as smart as it gets. I can't even believe they're dealing with me and us and our misfits ragtag bunch that we are here. But I'm grateful for it. So I don't know if you want to say something in closing, and we'll cut it there.
This is exactly what we expected, fast and furious. And I think that your point to your community and viewers and investors is exactly correct, is that we are simply enabling the inevitable, which is Bitcoin to absorb all assets back into itself.
I would say trust but verify. We've done all the work. We spent a ton of time with lawyers. We've built it. It works. Come in, give it a shot. And if people are ready to go and have a conversation.
All right. And in closing, in a perfect world, in a not so different future, in not a distant galaxy, we will be running Lightning Ventures deals for our founders and these Bitcoin entrepreneurs using this technology, be it through our own kind of white labeled crowdfunding public sort of platform, okay, in a completely compliant, hopefully global way. We are going to be able to help our founders raise money from everyone, okay? Not just accredited investors, not just certain people with higher limits, okay? So I hope that this is the beginning of us working together more as well.
Look forward to it.
Yeah.
All right, guys. Thanks for hanging out.
Thanks, Mike.